Okay, so trading tip of the week. So, I've sort of done this a little bit around sort of something that's quite popular at the moment. So, during COVID, there was over 22 million new retail traders that came into the markets. Of course, unfortunately, they didn't all survive. The main reason for that is because they didn't understand trading. They just thought that open an account and they're going to make money. And as most of you know, that's not quite that easy. Now, in 2022, this year, it's been a difficult year for many, because of that high volatility. And of course, we came in at the beginning of the year and entered the bear market as well. Okay, we've recovered a bit from there, but, it's not a foregone conclusion that we're now sort of just going to go up and up and up. Potentially till the end of the year, because obviously the funds want to get the highest valuations that they can. But, it's data that's going to dictate that for sure. Okay, and of course, many failed, mainly due to the lack of capital. Okay, yeah, they didn't understand trading, they didn't understand the markets, but for a lot of people, it's because they didn't have enough capital in their account. So, they're getting stopped out too quickly, too early, and of course, they were losing too much too quickly as well. Now, there are these funded accounts out there now. They're very fashionable. And, if the trader can pass that challenge, then they do get that funded account. It's all set up at different levels, different parameters. Now, the reason I mention this is because we've actually partnered up with one which is called Nordic Funder. We've looked at lots in the past, but we like this one because they offer multiple asset classes. And for me, the most important thing is there's no time limit. There's a lot that give you these 30 days to make this 5–10% or whatever they set you as a challenge. But, that puts a lot of traders under too much pressure. So not having that time limit, I think, personally, is an advantage. And of course, they want traders to pass. And that is, one of the reasons why we're providing their preparation workshop for those that are looking to improve their chances of qualifying for a funded account before they start or even after. And plus we do mentoring as well to help people, even while they're doing the challenges, they can come to us and I will give them advice on, the best way to manage, any problems that they've got. I'll help identify them. Okay, so now we're going to move on to the analysis. As usual, just sort of highlight this in the right-hand column in the axis, right-hand axis, black numbers, support resistance levels, brown numbers are breakout levels, claret numbers are just horizontal levels based on either where I see support or resistance, or they could be double or triple tops and bottoms. And the black numbers, on some of them I've got the sort of horizontal line going across, but just focus on the number, don't worry about the line. Anywhere I've got the pivot points on, again, you just put that colour in there, you can see that. So the solid blue line in the middle is the pivot point. The two above are resistance levels, the two below are support levels. Fibonacci colours, they're a little bit faint, but they're there. Again, just in case, I don't think I've actually added any Fibonacci this week. So, but just remember them for if you do see any. Okay, so moving on. So stocks ended the week stronger, as you can see from that. So on the daily, I've got resistance at 35,769 and also at 34,403. Support, I've got 34,038 just because that was a previous resistance level, and then at 31,726. On the Dow, on the 30-minute, I can see resistance at 34,400, so pretty much the same level as on the daily, with support at 34,232 and 34,016. Dow's probably performed the best of all of the 4 US stock indices, really. They actually got up and broke through the April, May previous highs resistances. And you know, again in August we sort of hit them, but this time round it's only the Dow that's actually hit that and gone through. So when we look at the S&P on the daily there, you can see how far away that is. That's at 43.02. And then I've got resistance below that at 4,054 with support at 37.99. On the 30-minute, I've got resistance at 4,045 and 4,038 with support at 4028 and 3993. So obviously that support's a bit further away, but you know, we've got a busy week coming up. We don't know, anything can happen this week, I would say. Okay, so on the Nasdaq, you know, the techs are still under pressure, and if you look at sort of going along here, so we've still got those resistance levels in, sort of again lower down from the April May sort of resistance. So I've got 13,567, which is where that resistance is, but we're well away from that. So my first resistance level is 11,963 with support at 11,529. Now, Thursday, Friday, US sort of holidays, long weekend for most of the US because of Thanksgiving and then Black Friday. There, you know, it failed to break R1 over those couple of days, and then it came down and then it ended up testing the week on the S1 support level. So on the 30-minute, I've got resistance at 11,812. And I've got support at 11,722. Moving on to the Russell, remember they're the small and mid cap stocks. I've got resistance at 1899 and 1879, and I've got support at 1757. On the 30-minute, I've got resistance at 1875, which is close to the daily one, and I've got support at 1851. If you want to be definite spot on, then it's 0.70, but you can see that on the line anyway. And you know, remember, you can always take pictures of these or screenshots, or just make a note of the numbers if you're keen on them and you want to keep that interest. Just have them as reminders. You know, sometimes the dailies are much further away, but the idea of having them is because you get these sort of data or extreme occurrences during the week, and at least you've got some levels that have already been sort of preset for you. Okay, so moving on to currencies. So, you know, we did see that bit of dollar weakness come in, a bit more, I would say, than you've seen any strength in the pound or the euro, maybe a little bit more in the pound, but I still see resistance there. You know, I just can't get bearish of the dollar at the moment. I really can't. They've still got the strongest economy. Just because they're going to cut rates, or sorry, not cut rates, but cut the pace of their rate increases, for me, you know, that means that probably everybody else is going to as well. So what's really changed? They're still going to be ahead of everybody else. They've still got the stronger economy. They're going to go into any recession later, as far as I'm concerned. It's going to be more shallow than the European recession, certainly the UK one. You know, so just remember, this is my opinion, but you know, that's the way I see it. So, you know, I've been massively bullish of the dollar for the last 2-3 years. So I'm not saying that it can't weaken a bit, because obviously it has from the highs, which does make sense. But I just don't see suddenly a massive rush to sell the dollar. Okay, so on the daily, resistance levels, I've got 122.93 and also 0.2164. Support, I've got at 118.17 and 115.50. You know, it's a long way up from the 103 and a bit low that it made when there was the panic over when we gained our new previous Prime Minister. And now we've got yet another one. The latest one, Sunak's been quite fortunate. There hasn't been a run on the pound. It hasn't really strengthened because they're there. It's just purely based on the dollar weakness, I believe. On the 30-minute, I see resistance at 121.17 and support at 120.64 and 120.11. You know, if it breaks those sort of levels, then, you know, again, you could see it even pop down below the 119s again. So again, just remember my view only. Looking at the euro against the dollar, so I've got resistance at 109.59. I've got resistance at 106.72 and also at 104.91. And then support, I've managed to find one at 101.30. So a bit of room for that to come down if the dollar strengthens at all. On the 30-minute, I've got resistance at 104.38 and 104.26 and support at 103.15. Moving on to crypto, Bitcoin. Well, another week of consolidation for crypto. You know, we used to think of it as, wow, look at the volatility in that. But, you know, there's volatility in all the asset classes and probably less in crypto at the moment. Yeah, they've certainly been through their troubles with FTX and such like. But it is sort of stabilizing for the moment, you know. Hopefully it can hold here. Just going to really now depend on what comes out next, positive or negative news. So on the daily, I've got resistance at 16,870 and support at 14,070. So 14,070. On the 30-minute, I've got resistance at 16,725 and I've got support at 16,445 and 16,310. So, you know, as you can see, they're quite tight. So it'd be interesting to see how they sort of fare this week. And then talking about sort of the consolidation of Bitcoin, where it's sort of more ranging at the moment. You know, we're seeing that, and the stocks, you know, they did end the week positive. The relationships come back just a little bit, as you can see from that chart. But, you know, this week it could change again because we've got some big data coming out. Moving on to gold. Now, for me, gold's probably mid-range at the moment. And again, yeah, it's really going to wait and see what happens with the central bank. So I'm not sure what's going to happen with gold towards the end of this year. I traded it a lot earlier in the year. To be honest, I haven't really traded it that much towards the end of the year so far. You know, I've got some levels that I stick to. I managed to get one trade on last week, and that was it. Okay, so on the daily, resistance at 1786.3. Support I've got at 1721.9, which is a level I've been looking at for ages, and I just buy it when it dips down there for the moment. And support at 1704.9. You know, I'm not greedy on those though, because as I say, you know, it may be a little bit mid-ranges at the moment. It does have that chance to drop off again. It really depends on the data this week, I think, to decide for that. Gold 30-minute, I've got resistance at 1759 and I've got support at 1749 and 1733.8. And last but definitely not least, oil continues to be volatile. We've got negatives and positives going on with oil at the moment, probably more negatives than anything else. But I just can't get massively bearish of it. I mean, obviously, we'd love to see oil prices come down because it does help with inflation. The negatives, the US are considering allowing Venezuela to export again. It just depends on sort of some politics there. Of course, we've got negative from recession. It will impact demand. And of course, China lockdowns getting back into sort of stronger after there was that fact that they could actually ease them. They're now sort of going into deeper ones and more sort of widespread because their COVID cases are in record highs now. So again, that could impact demand. On the other side of it, there's the possibility when OPEC meets next weekend that maybe they'll consider a cut just to stop it coming off any sort of faster than it already is. Last week, I think it probably had about a $7 range. It sort of was up in the 82s down to the 75s. Resistance levels I've got at 93.71, 90.12, well away, I know, and then 82.37. Support I've got closer at 76.23 and 74.85. And lastly, with the 30-minute, I've got resistance at 79.89 and 77.50, with support at 75.71. And of course, we've always got to sort of just have one eye on what's going on with Russia and Ukraine as well when it comes to food prices, energy prices, and especially with Russia, of course, because they are a large exporter of oil and gas. So anyway, so that's the analysis. Just going to move on to what we do. So our services obviously include this, as you know, and then the daily newsletter that we send out each morning to your inbox, which includes global news, fresh chart levels, and fresh pivot point levels on a daily basis. And then, of course, we do our one-day workshops, which help you just sort of maybe boost a particular area you're a little concerned about, or maybe want to learn a new asset class or something. We can do it all. And then we do 1-week courses which really accelerate your learning process and get you much further ahead quicker than you would do either on your own or watching loads of YouTubes. And then, of course, there's our masterclass. With our masterclass, it's 4 weeks of guided learning, but they can be spread out. You don't have to do them all in one go because we know you're busy. So we just keep running that course every alternate month to help you so that you can come back and finish that bit by bit. It does also accelerate the learning process because it gives you a chance to practice in between. Mornings are always theory, afternoons are when you get those practical sessions and guidance from me. We do trader mentoring just in case you want to reach that next level. We consult to a number of companies to help them with sort of their exposure to raw materials, even sort of foreign exchange if they're international companies. And of course, we provide a lot of trader educational content to individuals, to exchanges, and to brokers. If you would like to contact us for any information, then it's info@symaxfintech.com. If you've got a trading question you'd like to aim directly at me, feel free to reach out. It's chris.tubby@symax-int.com. Thanks for listening and hope to see you again next week. Take care, have a great week and be lucky. Bye for now.